It's been a brutal year for the public markets, with the S&P down 24% through the first 3 quarters of this year. And the traditional portfolio of 60% stocks and 40% bonds is down 20% as well. Now, despite all the market backdrop, Yieldstreet's Prism Fund is up on the year, returning 2.88% through the first 3 quarters of 2022. How does that happen? First, let's take a step back. We launched the Prism Fund in 2019 to give investors access to a portfolio of income-generating private market investments that we believe are designed to have less correlation to the broader market, with much lower investment minimums than typical private equity and private debt funds. Now, the fund does this by focusing on real estate, private credit, legal financings, structured notes, and transportation investments. These specialty finance investments are sourced by our team of investment pros and are generally off limits to retail investors. So to ensure that the fund is focused on income generation, we've chosen to allocate the majority of the deployed cash into private debt. As of the end of the third quarter, the fund has allocated roughly 80% of its assets to debt and 20% to equity. From an asset class perspective, we've identified real estate and private credit as the key areas of focus, with those two categories making up about 68% of the fund's holdings as of September 30th, 2022. Now, we've emphasized those areas because we believe they offer attractive income profiles, typically low correlation to public markets, and the ability to structure agreements with the goal of protecting investor principal, so focused on downside protection and generating income. Within these allocations, we have been selectively increasing our exposure to floating rate debt opportunities because we believe they will benefit us in a rising rate environment. That means that as rates move up, the floating rate investments will be paid more in line with the way the rates move. So far, our investment thesis has held, with the fund returning 2.88% year to date, which did not hit the absolute targets we hoped to reach, but nonetheless, it outperformed 60/40 by 18%. This is the beauty of private market investing on Yieldstreet. You have the potential for strong returns in a bull market and the potential for downside protection in the bear markets. It's been a tough year for all of us, but paralysis isn't the right option. You got to take an honest look at your current portfolio and then head to yieldstreetprismfund.com to see if additional private market exposure through the Yieldstreet Prism Fund can help you meet your financial goals for 2023 and beyond. Thank you.